Welcome to Currency Watch. This is Chris Keene from akeenpointofview.com. It was a very interesting day of trading in New York as most of the majors pushed lower against the US dollar in North American trading until the European close. And then after the Spanish press conference, the euro took off and the majors took off against the US dollar. This pushed a lot of the majors back from significant gains and led them to about mid-range for the week. If you can look, let's take a look at the Euro USD to start things off. You can see that so far this week, this is a weekly chart of the price action. The pair has been traveling in a relatively tight range, with the highs of the week around 129.70 and the lows right about here at 128.30. So we've been traveling in a narrow range, and we're sitting about mid-range now. But now the cross is firmly above 129 once again, which you could see had acted as significant price resistance up until this point, and price support into the beginning of the week. If the pair can manage to remain above 129, this will be the bull-bear line. We could see a push up towards the highs of the week around 129.70, 129.60, which would hit the descending trend line that has capped the price action of late. If the pair can't remain above this 129 level, we could see a meltdown back down towards the 128.20 level. So this 129 level is going to be the key heading into the end of the week trading in the Euro USD. The next pair I'm going to watch is the CADUSD, just for an indication of risk in general. It looked for sure earlier in New York that the CAD was about on the brink to break above the 0.9850 level that had contained the cross over basically over the last 24 hours. But then, as with the majors, they lost against it gained against the dollar into the close and pushed down below the resistance zone, which is currently between 98.50 and about 98.10. The pair couldn't make any significant headway from there. So what will be key to watch would be see this level right here at the 98.10 level, to see if the cross can bounce off this and push back down for a further move lower towards the 96.66 level. If the pair does continue to does move back up into this resistance zone, though, then it'll be anybody's guess once again until we get a confirmed 4-hour break on either side of 98.50 and the 98.10 level. The last pair I'm going to take a look at is New Zealand USD, just because, as we spoke about yesterday, the pair broke above the descending trend line, and gave a significant close. Right about the significant close and retracement, but remained this ground, and traders could have definitely got in this trade looking for a push higher. A lot of pundits thought that at the 83 level it was going to run into significant resistance, but the cross continued to move higher with risk in the end of the trading. What will be more important to watch into the end of the week is going to be this level right here. It's going to be the 0.8334 level, because this is the high of the week, and if we can get a break above this level, the pair could open up for a wider move higher in the short term. We see a push up towards the 83.50 level originally for support, but more importantly, if we get a break of that, we could be on the way to 84.70. Now, if we do get a pushback below 83, we could see a pushback towards the trend line. So it'd be important to watch the highs of the week between 83.30 and 83.50, and the trend line's support, which is currently right at 83. All right, so we're going to be keeping our eyes on the Euro USD, all about 129, the CAD about the resistance zone between 98.50 and 98, and New Zealand, it's all about the 0.830 level, or the weekly highs, and the price action high between 83.50 and 83.30. That's it. Everybody have a great weekend. This is Chris Keene from A Keen Point of View, and this is Currency Watch. Remember to keep your trades keen and to play it safe.